Hello everyone, so let's recap the Christmas period and explain exactly how we look at things. Let's go to a different chart. Let's go to this one down here. Is that a bit clearer? Maybe, yeah, that looks a bit clearer. So, on this chart we've got the same kind of things. So before the Christmas period started, which was here. So this was the Friday, and we've got that big bullish move that invalidate the sell that we was preparing for. So the day before, we had interest rate news here, and then the next day we had I think that was another news event, and we was looking for the continuation down, which confirmed bearish is likely to happen over the Christmas period. So going into the Friday, which is here, you would already be in your sales from up here or all the way up here, but most likely to be here. Let's just put an arrow on. Like that. So you'd be in a sell like that, you'd be at break even and you'd be at profit. Now if you wasn't in that move, I know a lot of people wasn't, you would be looking for a sell from here, because this is your breaker. This is your breaker and you have bearish confirmation. So going into this day here is the Friday, and you'd be looking, you saw some resistance here at the breaker, so you get into the sell. If you didn't move to break even, that would have been the stop loss hit here of that bullish move there. So this bullish move invalidates that whole bearish bias, because it gives you such a big bullish move which clears all of this price action. So takes you out of your position, took me out of my sell position. Then you have to relook at the chart. Price is not giving you what you want, so it's doing something completely different. So we're going to stick that on there like that. That's a previous day high. You can see that pushed up, took the previous day high. Then we go into the 23rd, 24th. So this is the last days before Christmas. So looking at that, you have cleared a liquidity pool. You have a manipulation area, and you know that it's not bearish for the long term. So you try to get into the bullish move to make any kind of profit back that you lost from this sale here. Let's say you lost a nice chunk of your account. Price then takes the high here. That is perfect opportunity to start selling. London opening, takes the previous day high, perfect reversal set up, back down. And this is your main manipulation area. So this is your bullish support area. So if you miss that downwards move, then you would spot this bullish support from here and here. This is on the last 2 days before Christmas. So most people got the buy from here, and it's quite simple on where you would target, because you're targeting a continuation up, you're targeting these previous highs here. So over the Christmas period, you had left it to run, and then you took profit there, which is on the 26th, Boxing Day, in the afternoon. So that is an easy way to recover any losses, just by understanding the price action. And because there's no volume in the market, you're able to recognize these moves as being true. And you've also had the confirmation that this bearish setup is not valid anymore. It's invalid, and you're likely to get a bullish move over Christmas. So that's the sort of thing I traded the buy from here, just targeted this high, and that recovered any kind of loss from here. I did take a sell from here too, but I already had a sell from up here from the previous day. So going into the next day price action. So Boxing Day here, takes profit up here. Then we go into the 27th. So what I explained about the 27th, and that is likely to be where the profit taking starts happening. So the 27th is here, and you can see we've cleared that previous high, and we've also got a nice sell set up with the London opening. So this is a nice clear sell setup for profit taking of that bullish move, because we validated over the Christmas period is likely to turn bullish. So this is profit taking from that bullish move over the 27th, going into the 30th, and then you have the new year. So So this is the last day of the year. Profit taking has already been done, and now we start to buy again because this is a retracement looking for a continuation up. Now, the first and the last day of the year, no, I'd mainly say the first day of the year is where you're going to see all the volume. Not many people are going to be trading, so you're likely to get a retracement, which you're going to see tomorrow. But that's why you've seen this big bullish move, because it's at the end and start of the year. So that is why people who have been holding the trade for all year are now taking profit on their positions, and this is just showing it on the chart. So this is now a retracement here, and now everyone coming back to work tomorrow will be getting into new buy positions for the long term. So that is why we are looking for bullish support from this area here or this area here. So nice reversal expected over tomorrow and Tuesday, and then the continuation up. But that is what we looked at over the Christmas period. Simple, had a bearish bias at first, got invalidated by this big bullish move, switched to bullish, continued up, take profit, and then enjoyed the rest of the holiday season. Didn't trade any of this price action, and now we're going into a new week, new year, with a new fresh approach of the markets, and that is what happened over the Christmas period. You always have to adapt and change your bias if things show that are validating what you thought you saw on the chart. You have to be able to adapt and go with what you see.